Hello and welcome to the Commodity Trade. I'm Piyush Jain and you're watching Btvi. Joining us on the show today are Sumit Bagadia, the Associate Director, Choice Broking, and Prathamesh Malia, Chief Analyst, Non-Agri Commodities and Currencies at Angel Broking. Welcome to the show, gentlemen. It's looking like a very interesting trade. First, let's actually look at how the commodities again have panned out, and then again we are going to bring our guest into how it's looking overall for the next week here. Oil prices again, they basically have gained slightly as again dollar actually has slipped to 3-year lows. Firstly, basically what is interesting here is dollar index actually has been weakening, and again we are talking about around 89, 88 levels here. So again it's looking slightly weaker for dollar here. Overall, again the currencies, euro, pound, again those actually have surged. There has been a surge in the yen also. So overall it's actually a weaker dollar trade which is going on right now. On the US, again basically in terms of crude output, that actually hit a record more than 10 million barrels a week again last week. So 10 million barrels per day again, million barrels per day that last week. But in terms of gold and silver prices, again there was an uptick, and that uptrend actually is indeed looking very interesting in the context of dollar weakness here. On the base metals at present, the copper, zinc, aluminium, nickel in particular very strong, but all base metals again have registered a good recovery here. So again it has been indeed a very interesting week, and the next week again also hinges upon what's the trend on sort of dollar here, what's the trend on the base metals, given actually we are in the middle of the Chinese New Year celebrations here. So now again let's talk to our guest and try and understand basically what you should be doing in the context of the trade strategy, and also in the context of what are the fundamental factors which are driving the commodities right now. Prathamesh, coming to you first, and I want to ask you first on the energy prices here, because on one side we actually are looking at a sort of weakening dollar trend here. On the other side, again, the question here is, and the last time we were talking about the crude oil prices, we were talking that perhaps the weakness is actually the order of the day. So now, what do you think basically, how's the next week going to look like at present? Are we near the bottom, or you think that perhaps the fundamental data is still not looking positive here?
Good afternoon, Piyush. I think last week when we spoke about dollar index, we spoke about dollar index stabilizing at around 90 mark, which does not seem to be the case now. It is trading at 88 mark. So in that sense, it is inverse relation with commodities holds true, and accordingly gold, silver, crude, metals, everything is rallying up. Going as far as near-term factors are concerned, I think crude prices would possibly move upwards towards $64 as far as WTI goes. But I think the near-term trend looks positive overall. But looking at the factors that are going to play in March, I think refinery maintenance is something which you really need to look for a keen eye for. I think it would be sell on higher levels. But near term, I think $2 to $3 move looks to be there on the cards. And in Indian rupee terms, it translates out to be a move around 120 and 150 rupees from here on. Hence, buying strategy advisor levels for target towards 4,000 mark.
Right, and what's your own view regarding, like, suppose there is more depreciation in the dollar here, if suppose that happens, I'm just trying to ascertain the risk here, because in that case, do you expect a sort of appreciation rupee, or basically the dollar continues to weaken here? Is that actually could also be a factor which could actually influence the crude price, or you see there is anywhere a sort of break in the correlation, the direct correlation between the dollar and crude price right now? Because on one side, we are talking about that perhaps there could be a bounce in the crude price. On the other side, if suppose dollar index or dollar actually registers a sharp sort of bounce because it has been weakening consistently, what sort of correlation you are seeing right now?
I think Piyush, going with the current thing that is happening on it, is really carrying the theme in the dollar. I think dollar index weakening and commodities rallying is what most of the commodities are following, and in that sense crude oil prices also rallying. And on the contrasting set of factors, I think which is crude oil specific, I think refinery maintenance is something which really would hamper crude oil prices from the top prices, and these are two set of factors which are different in context, but current theme is dollar weakness, and hence commodities rallying is the theme at present.
So, Prathamesh, I want to ask you, because everybody was expecting that perhaps from March, because of seasonality, there could be actually cool off in the crude prices, primarily because the inventory factor again will come into question here. We are into middle of February, moving towards the end of February. The market knows that, and the crude prices have cooled off. So, in your own perception, has that sort of cool off already been priced in terms of where the crude prices are trading right now, as you just talked about the refinery maintenance season here, or you think that perhaps there is if there are some data points again which could influence the prices again?
Yes, the second data point that I would talk about is rising inventory. Since we are possibly approaching end of winter in US, inventories would start to build up. Again, refineries going on maintenance. Again, all things possibly signaling towards crude oil prices falling from higher levels, and hence I'm a little bit cautious on crude prices rising at present. I think maximum from here on would be around $3 rise from here on WTI, which is trading at $61 now. So that's a little bit risk that I would take. If you're taking our near-term strategy, I think I would be on the buy side. But you are possibly keeping it for possibly a longer time frame, say 1 month or two, I would be on the sell side.
Right, so that's the word coming on crude oil from Prathamesh here. Let me actually welcome Sumit also here. Sumit, precious metals here, gold and silver here. On one side, again, we have seen a minor fall in the gold trust, SPDR, gold trust, again, basically gold holdings there. So which means that, again, in terms of the market holdings, again, that has not improved here. But again, the buying basically has also come because of usually around the Chinese New Year and the Indian Diwali, there is always a sort of physical buying momentum, and that perks up the gold prices. This time it's the Chinese New Year celebration. So there is some sort of excitement or positive sort of influence coming from for the gold prices here. So Prathamesh, coming to you, is the recent uptick in the gold prices incorporating both factors here, the fall in the dollar and the Chinese New Year celebrations? You think perhaps there is more upside, more incorporation of those two news events actually still at present still pending?
I think the combination of both factors, wherein Chinese demand, yes, on one side, weak dollar index, yes, is into play, and that is what is resulting into gold prices as well as silver prices going higher. But as far as gold is concerned, I think in the Indian markets, 31,500 is the maximum that you can look at as far as gold price is concerned. That is possibly a move of 6 to 7% from here on. While as far as silver goes, again, it should be on the buy side, close to around 39,500, which is a positive move around 800,000 rupees from current level. So I think I would be on the buy side for gold as well as silver as far as near-term strategy is concerned. But yes, again, we will have to look for come March, and we will look for FOMC meeting wherein possible interest rate rise is there. It seems to be there in the cards, wherein possibility of it being towards 95% is what the markets are factoring in. So in that sense, again, gold and silver will be there at higher levels.
Right. Also, Prathamesh, I want to ask you again if the market is factoring on any of these events again. The Newcrest, again, the Australian top gold miner, that basically has said after the earnings that perhaps it's actually looking to ramp up its operations at the site where again that was hit by an earthquake, so there was a production disruption. So do you believe that the ramping up of the gold output perhaps is something material, or that sort of production is not that price mover in the context of the quantity here? So any sort of commentary around that?
Piyush, I think in a total market of around 4,000 tons annual supply, I think a disruption from Australia would really not make much of difference. So in that sense, if you're taking into consideration the demand and the supply factor, creating an imbalance on price, I will completely rule out this possibility. The only theme, as you mentioned, is weaker dollar, and second factor, Chinese demand, is something which will play on gold as well as silver in the near term. So in that sense, Australian output getting disrupted or closed would really not have any impact on gold or for that matter silver.
Right. So basically, then it boils down to what the dollar actually is going to do, and then also how the physical buying momentum is going to sustain here. Sumit, what is the call? Our discussion on copper here. LME copper again basically doing quite good in the trade today. Now the interesting part here is that they basically are still trading below the January highs, but again there is a good recovery. So Prathamesh, I want to ask you, basically at present the volumes are thin here. Chinese New Year celebrations, so there are no major volumes here, but still there has been some recovery. So what's the difference between a copper here and a zinc here? Zinc is still trading about $3,500. Copper is still not touching those sort of highs here. So why there is this underperformance between the two metals? And number two, in the context of low volumes, how much conviction you have in the current trend?
I think Piyush, zinc is trading at multi-year highs, and the inventory is the story that's been really taking zinc prices higher. It's almost double in the last 24 months in international as well as in the Indian markets. It's trading at close to 230 mark. I think it is the inventory at 8-year lows is really supporting zinc, and hence zinc prices are in a positive trend, and I think this rally would possibly continue forward from here on. But I am a little bit hesitant taking into consideration Chinese New Year, Lunar New holidays. I think volumes would be low. Any rallies, I think it is a difficult place to be there. If you see corrections, it would fall faster. So I think in the entire metals pack, I would preferably pick up copper for buying at current market price. 458 is what currently trading at. Target higher towards 465. So that is what the difference between copper and zinc, which is really not picking up as compared to zinc.
Right, and while again we are talking just about the metals here, there was an important flash which is just going there on the screen, that the loss to PNB because of the Gitanjali case has been estimated around 4,800 crores. And just keep in mind, the CBI sources, again, two Reuters, basically have estimated that loss at 4,887 crores. So again, that's the number again basically which we have to be mindful about. It's only actually we are talking about only Gitanjali, and again the entire Nirav Modi case, again that basically perhaps could be actually slightly more here. The stock is trading very weak. Gitanjali is at lower circuit here. So again, the news actually they are coming thick and fast here. Now, Pratmesh, we talked about copper and zinc, but then before I actually go to Sumit, I also want to ask you regarding aluminum also. What do you make out of the sudden surge in the inventory levels in aluminium here? Almost in one day, 160,000 tons again, the warehouse inventory increased, and we actually just saw in a couple of sessions, last 3 or 4 sessions, almost more than 250,000 basically tons of inventory has increased. So is there any risk to the aluminium up move in the recent times?
That we might
I think, Piyush, it is really not going to make much of difference to the price because aluminum smelting capacities in China in 2018 would really be taken off, and that would really create an increasing demand for aluminum from China. So whatever increase in inventory that you see on LME would really be consumed by Chinese people once they are back on from Lunar New holidays. So it is really not making much of difference as far as price is concerned. I think aluminum would also go higher towards 145, 150 mark as well. So I think I would be buyer in aluminum. But yes, the risk placed for this particular week or so, wherein Chinese guys are off, and it placed me into tight spot wherein you can see possibility of a correction from higher levels.
Right.
So I think for a near-term strategy, I would be a buyer in aluminum, but I would be hesitant to have continuous long buys and position in this particular counter.
Right. So near-term buy in aluminum. Sumit, very quickly, since we actually are running out of time, what's your own sort of strategy? How do you see the base metals? Which are your top picks? What's the strategy here?
We have two commodities in a base metal pack, and that is lead and nickel. Both are looking good to me. One can initiate long positions in the lead at the current market price. That is around 168, 168.20 levels, with the stop loss to be placed at 166 levels on lower side. And from here on, there is a possibility that we might see move till 170 or 172 levels. The second pick for the day is nickel. Nickel has given a good move. Now looking at the chart, it seems that from here on, we can see upside move in which we can see 940, 950 as an immediate target. For a trading perspective, one can initiate long positions in the nickel at the current market price. Or if there is a dip of around 8 to 10 points from present levels, then that should be used as a buying opportunity, with a small stop loss to be placed at 875 levels on lower side for the upside target of 930, 950 levels in next couple of days.
Right, so again, that's the word coming from Sumit on the strategies here. With that, it's a wrap on this edition of the Commodity Trade. News and updates, they're going to continue on the other side of a very short break. Thank you so much for watching us.